Over the past few weeks, I've been one of the traders expecting continued dollar weakness. The macroeconomic has supported it. That means that this month we had a weaker non-farm payroll, we had a weaker CPI, we had a weaker PPI. Everything pointed towards a weaker US dollar. But today, I'm changing my bias, not because of emotion, not because of fear, but because the market has given me enough evidence that something has changed. Today, I'm going to explain why I'm abandoning my dollar weakness thesis, why the dollar index has become my biggest confirmation, and what I'm looking for next. Welcome back to the channel, traders. If you are new here, my trading style combines both microeconomics with technical analysis. I'm not interested in predicting the market, I'm interested in following evidence. Sometimes that means staying with the idea for weeks, other times it means admitting the market has changed. Today is one of those days. Traders, let's go back to July and see what happened before we can even explain anything else. Now, what we all know now is that this is July, and with July, nothing really is happening. This is the euro and the dollar. This symbolizes that this symbolizes the thinness of volatility during these holiday seasons. So if you have been having a bad time with euro and the dollar this month, this does not necessarily invalidate your skill. This means that there is less trading volatility in July and August. So with that being said, let's get to this. Remember, my thesis was not just another random idea on the dollar. It was first built with uh, a disappointing non-farm payroll, which is here, a disappointing CPI, which is here, and a disappointing PPI, which is here. Right. After all of this, this was the move to the upside with non-farm payroll, which later resulted with this pullback, an impulsive move to the downside, a pullback, and then PPI came in with a stronger move, pullback, and then another. This is CPI, this is PPI. I'm sorry for making that mistake. Now, with the PPI movement, it went up after this new high of the month. I expected to see this coming from here and then continuing to the upside. Instead, the dollar just pushed to the downside, symbolizing the randomness of the whole of July. So this has happened. We have reached the low of the day of non-farm payroll here. What does this mean? This means that the dollar might be in control. Now, with that being said, each release increased the probability that the Federal Reserve would eventually become less aggressive naturally. This weakens the dollar. My position reflected that on I bought the euro against the dollar, and I also bought the pound against the dollar. This is the break even. I also sold the dollar against the Canadian dollar right here. And right now we probably have a stop loss here with US dollar and the Canadian dollar. So this sell is still valid. We do have a stop loss here because I do believe that we might be coming down to continue to the upside just for the randomness that is happening right now in July. And gold has been stubborn, but if you pay close attention, you can see that despite the macroeconomics being strong, this is the non-farm payroll spike to the upside, and then a pullback break in the day of the non-farm payroll. This is the CPI, this is the PPI, but the market just continued to go below these levels. Excuse me. So, with that being said, traders, this means that excuse me again. This means that gold, no currencies, the randomness that has been happening in June and July is due to one thing, the market randomness. Your strategy, it is not failing, and I will show you exactly what changed. Here's one thing to remember: the markets don't care about our opinions, they care about new order flow. And this week, the dollar index gave me exactly that. Let me show you what the dollar index showed me. If you look at the DXY, price has now broken also above to make a new high, not of this month yet, but ever since the non-farm payroll. This was the non-farm payroll, this is the CPI, and this is the PPI. And right after the PPI movement, this has just been the move to the upside. Now, I believe this to be strong enough to invalidate this, because not only did it invalidate this on euro dollar, it has also invalidated this with the DXY. It has also invalidated this. It has not yet invalidated the pound and the dollar. If we can go to the pound and the dollar, this is extremely important before we go to the pound and the dollar, because it tells us buyers have completely absorbed the selling pressure created by the weak economic data. As you can see, the high of the day of NFP, the high of the day of CPI, and then the high of the day of the PPI. All of these are absorbed by this buying pressure that started right after the CPI, after the PPI. So before anything else, let's go and check what this means for the pair. Of course, right now we can see that euro dollar has been invalidated. Of course, same as the DXY. Gold has been invalidated for quite some time, and most importantly, this pound and the dollar is not yet invalidated, but what you can see is it is closer to the levels of invalidation than most currencies, because this is the level of invalidation that we do have right here. This is the day of the NFP, and it's closer to this level because it is less than 100 pips away from this level right here. Now, if you are a trader and then you realize that there is market randomness in the market, this is probably because of this. This has nothing to do with you as a trader or being a bad trader. So, with all that being said, traders, next week is the interest rate decision of the dollar, which might potentially, because of this, push the dollar higher to a deeper support. This would go to the upside instead, and the continuation to the downside might continue on gold. Now, as a trader, this is where many traders get trapped. They are still looking for old news. I am looking for today's price. If weak inflation, weak employment, and weak producer prices can no longer push the dollar to the downside, that tells me something. It tells me that buyers are stronger than sellers. That's information. Price is telling us the market has changed. So naturally, my trades reflect that change. Pound dollar has hit break even, euro dollar has hit break even, and US dollar, Canadian dollar is struggling to make new lows. Gold has gave back most of its gain, like this one, and then to the downside right now. It's not yet at break even, but closer to break even also. And I would wait, of course, because of my discipline rules, before we get a break even and change the idea. That doesn't mean the original analysis was stupid. It means the market stopped rewarding that analysis. This is probably one of the hardest lessons in trading. Many traders become emotionally attached to an idea. They keep searching for reasons to stay right. Professional traders do something different. They let the market tell them when they are wrong. Changing your opinion isn't weakness, ignoring new evidence definitely is. So, from where we are currently in the market, my focus changes. Instead of searching for dollar weakness, now I'm watching whether the dollar can rebuild from the continuing dollar strength above this breakout. I'm also watching treasury yields, Federal Reserve expectations, gold, and the upcoming inflation. If the dollar continues making higher highs, then I'll begin positioning with dollar strength instead. So today isn't about admitting defeat. It is about respecting what price is telling us. Trading isn't about being loyal to a prediction. It is about following probabilities. The market has changed. As traders, we change with it. If you want to learn how I combine microeconomic analysis with technical execution before entering trades, join my VIP. You'll receive exact entry, stop loss, and take profit levels, break even management, live trade updates, and daily micro analysis. You can also join my free Telegram group using the link below. If this analysis helped you, like the video, subscribe to the channel, turn on notifications. You'll see the next update definitely tomorrow.